Hello, everyone. I'm Chris Kapchis, CEO of Chestnut Park Real Estate, and today I'm here to provide you with the March marketing report. March's data have there's been an improvement, but the market is still suffering. It's suffering for so many different reasons, but primarily the geopolitical issues that are affecting not only Canada, but effectively the entire world, are filtering down into uncertainty and I might even say fear in some cases as to what's going to happen economically. And we see that fear and uncertainty translated into the market results for March. I mean, if we look at the overall numbers, and you'll see them on the screen behind me, only 5,011 sales were reported in March. We literally have to go back to the 1990s in order to see a March when only 5,011 properties were reported sold. Just year over year, we were almost 23% fewer sales than just even last year. Again, an indication of the fact that the market is anything but robust. The other factor that's still at play is affordability. Even though the market is slow, and that was clear in March, average sale price still remained fairly strong. Overall, the average sale price came in at $1,093,000. And one has to remember that that average sale price is all property types. And I'm going to take some time during this report to actually look at property types and look at a few of the jurisdictions in the Greater Toronto Area and how they're actually operating. In fact, I'll turn to that right now. I was going to talk about a bifurcated market, but in fact the market is a trifurcated market. It's sort of terms we don't often use to talk about real estate markets, but they're quite obvious in the month of March. And I'm going to start by taking a look at what's happening in the 416 area as compared to the 905 area, specifically for ground level properties, townhouses, semi-detached properties, and detached properties. There's a huge differential between the one and the other. And also what I'd like to look at is the ground level properties, how they're doing in terms of sales compared to condominium apartments. There's huge differences between those three, as I say, trifurcated marketplaces. And you'll see from the data on the screen, I've tried to break it down so you can visually see what's going on. But let's start with ground level properties. If we look at, as I said, detached, semi-detached, and townhouse properties in the 416 and compare those sales to sales of the 905 for those housing types, you will see a great distinction between the two. So for example, in the 416, the sales were off by 12% compared to last year. But in the case of the 905, they were off by 25%. If you look at the average sale price, you'll see that in the 416, average sale price actually went up by 1.3%, whereas it dropped by 5% in the 905. Same thing with days on market. Days on market in the 416 in the month of March was only 16.6 days, whereas if we look at what was happening to our north in the 905, it was 19.3 days. Sales to list ratio. Both of them had a great sales to list ratio. In the 416, sales to list ratio was 104% of the asking price, and in the 905, 102% of the asking price. And again, I repeat that those are the distinctions when it comes to ground level properties, detached, semi-detached properties, and townhouses. Now, let's take a look at the difference between ground level and condominium apartments. Condominium apartments took 32 days to sell in the month of March, whereas ground level, as I just mentioned, was only 16.6 days. Sales to list ratio, 98% in the case of condominium apartments, 104% in the case of ground level properties. So you can see that this marketplace is anything but homogeneous. It is actually a very, to use the term again, trifurcated marketplace between what's happening in the 416, what's happening in the 905, and what's happening between ground level properties, detached, semi-detached, and townhouses, and what's happening in the condominium marketplace. The condominium marketplace is suffering and has been suffering for the better part now of over a year, and it probably will continue to suffer as we go forward because there's some structural issues that the condo market has to work its way through. But as you can see from the numbers that I mentioned, the ground level marketplace, particularly in the 416, is actually still strong. What's holding it back, and even in the case of the 905, is this uncertainty that I mentioned that is geopolitically driven as opposed to connected to typical economic factors that are responsible for housing resales. If we can get some stabilization in that regard, I believe that you will see the market pick up again and perhaps get closer to the pace where it should be, as opposed to reflecting where it was back in the 1990s. Early data for April indicates that in fact is happening. As we saw that a little bit in early data for March when we did our last market report. And I think it's going to continue to accelerate, assuming, however, that nothing happens on an international level, particularly matters coming from the Trump administration that have an impact, again, as I said, on uncertainty and the fear of economic disruption. So until we have the April market report, I wish you all to stay well, and I look forward to presenting it to you when it's available. Thank you very much.